Mm. Okay. Ooh. All right. All right. Okay. That's enough. That's enough information. Okay. I get the gist. Let's go. Okay. That's all the information we need. Yo, I. What you man saying? Today's stream is gonna be all about how to end the day in profit. That's everyone's goal, right? If you're day trading. How is everyone? How is everyone? Mm. Let's just get right to it. I'll be real. So let's say you just hopped on the chart right now, and your chart looks like this. Let's say your chart looks like this, right? You can see the candlesticks, you can see the wicks. I recommend that you don't start this way. I'll follow my process. Just follow my process, yeah? So zoom out. And show your highs and lows. Now this is as far back as I can go in the 15 seconds. Yeah. But I'm gonna walk through the whole process. You guys saw me do this in the beginning. Like it's really just subconscious at this point. But you will, it's so easy. Like it's literally just like that's all you're doing, yo. Like it's easy. It's 50% in your win rate right there. So check it. Break above a high, put in a low. Break above a high, put in a low. You break above that high, we violate the low. Cool. That becomes protected. That becomes protected. Protected, failed. Broke below. Protected. We put in a low, high there. Bow there. Boom, boom there. Back, violation. That's protected. Back there. Back there. See a violation there. Another violation there. Then it violates blah 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 blah. You probably see a news candle there, whatever. But you guys get the gist, right? Show your highs and lows, G. Trust me, like that's it takes care of 50% of your win rate. 50%, bro. Practice that. Yeah. All right. Cool. Listen. So zoom out. Identify your zones. This is probably some. Oh, okay, cool. We already took it out there. That's my target. If I want to understand this more now. Alright, cool, whatever, but it's unlikely though. We'll see this, but it's there. Let's zoom out. Now, look, I'm on the 15-second now. Yeah, I'm on the 15-second. You can see that. So, what I do, just follow my process. Just follow the process. Right. Go on the 1 minute. Zoom all the way out again. Do the same shit. I'm not using this on. Neither am I using this one, so I won't get caught up in that. Origin of the move. We have a load just there. This zone. And no. No. Cool. This is the higher time frame swing. This is the previous range that we're in. So this is the bottom of the range. But like I said, low prices right now. I'm like, I'll be going for some shorts. Do the same shit on the 15-minute. Where you at? We're at the top of the range. I can't lie, that's enough for now. I don't really need to go up further time frames. It's the previous range. Okay, cool. I'll mark this out here. I'll use that. I'm using this as well. We're in a zone to the left here, but I'm not gonna bother marking it out. I usually focus on long, so I like to skew, not skew, but just use, you know, areas from the higher time frame in which I'm long in. And shorts to me are like just quick ideas, usually on the 15-second, right? So that's when I actually start plotting drawings to use to, you know, take some sell positions. So that's yeah, then you just want to zoom in. So when you've done this, right, you've now trailed structure on, you know, from the lower time frame to the higher time frame. You identify your S&D responsible and the origin of the move, unmitigated portions of it. And once you've finished that, you know, however much time frames it go up by, I don't go up by much. Literally, that's literally just 3 time frames right there. Then you want to start to read the narrative. So to me, that's zooming into candlestick structure as you would have been in the beginning if you hadn't zoomed out, right? And now I can gain just a way better idea on what's actually been going on in price, because the candlesticks, you know, they present the information more accurately than you would identifying your zones using structure versus candlestick structure. For me, anyway. So I'm looking for this low to get taken.
I'm overrotting.
So what you using Foxy Mobile's unlimited social media from £10 for now?
Being sociable?
Boring. Wanna see what your ex is up to?
With unlimited social media, the fun never ends on Boxy Mobile. Selected social apps in UK, TNCs apply.
Just took out that high for my target, yeah. We got like 11 minutes left in this. Oh wow. Either way, I'm not longing on top of it. I'm only considering shorts here. Okay, cool. I heard that. So alright, say no more. This is a 15-second play. Now those are the plays that I usually like to get involved in. Got the origin there. In fact, if I go on the 15, yeah, that's the string that we broke there. I'll just highlight that. Origin of the move. I'm looking for this low to be taken, price to enter the zone, and I'm looking for a failure on the 1 minute. And that's literally it. And I just sit and wait. If the opportunity comes, I'm prepared for it. If it doesn't come, you know, price ends up just keep going higher, then I adjust. I follow it and just, you know, make another plan. But all of my plans are, you know, it follows my rules. All the decisions that I'm making, everything that you see here plotted on this chart is information that I'm using to put my money on. I'm not just plotting anything and everything, thinking this, thinking that, maybe this, maybe that. No. When you're trading live, you need to it is this, it is that. You feel me? Now you wouldn't be using that zone there. You wouldn't be using this zone here. You wouldn't be using that. I usually like to use purple as that to represent manipulation. I just like the color. But not only that, it's like a big sign of just knowing when not to engage. And these golden areas are where the gold is. Beautiful. Not only that, though I'm marking out these areas, usually I'm within 50% of a zone. Right? But I like to, it's just me, right? But I like to use specific areas. You get me? Like I like to be, if I'm gonna use something, I want it to be embedded within price, not just on the tool type shit. So that's why I focus on the origin of the move and S&D responsible. You usually see a strong reaction from those areas. A strong one. Now, I did say I would, let me see. We got a failure there. Let's see. And this is how I usually like to monitor the chart after my whole, just trailing structure. After all of that, it's just, that's 50% of your work done. Now the rest you're just waiting. The rest, the 30% that you want, the 80% win rate that you get at the end of the day is just waiting, G. You're waiting for what? A zone to be manipulated or a low to be liquidated. Mitigate a zone below it. See a failure to, nah, these I'm out. This is what I follow, I'll be real. This is what I do. That's what I'm gonna just say that first and foremost. I'm waiting for that low to be liquidated. That zone to be mitigated. I want to see a failure to close below the previous candle's low. And then I'm on the seconds chart looking for the break of the S&D responsible. That's what I'm doing. Now I'm prepared for both situations, for lower and higher prices. That's why I have these two arrows here. In order for me to short, I need to see a high taken first. Likewise, in order for me to long, I need to see a low taken first. And these are structural lows. Structural highs and lows. I'm not using these teensy weensy lows here, like, nah, don't worry. I done back tested that. Done. That's when I was at 30%. That's when my win rate was 30% literally every single day when I was using these teensy weensy highs and lows. Like, fuck that. That's my personal experience, and you can get rid of that experience. You don't even have to go through that if you just listen to them and say that it's not worth it. Don't use them inside highs and lows. Use structural highs and lows. But yeah. If you fall in here, create a previous range just above it, like that. I'm looking for a failure to close below. Start trailing. Yes, to be responsible. Oh. Alright. You could close above here. I mean, am I reaching? Yeah, I'm reaching. Let's not do that. How do I define my structural lows? My bro, I just went through that. So if you go back to the beginning of the stream, I literally laid down my whole process, you feel me? So I already explained that. And what is manipulation of a zone you mentioned earlier? You're waiting for a zone to be manipulated or structurals. When it comes, so this is a zone at the top of the range. Now, usually these zones that are created just before the breakout are usually, you usually see the low of them taken out. So entering in a buy, from here isn't, as you can see, that would not have favored you all. Prices dropped with the same volatility as well. So that's what I'm talking about. These zones at the top of the range are meant to be liquidated, manipulated. And this is a structural low. So on 1 minute candlestick structure is 15-second structure. Likewise, 15 minute candlestick structure is 1 minute structure. You know what? I'll just show you. So 15-second structure is 1 minute candlestick structure. Where we at? Oh, okay. I'm zoomed in just a little bit. There we go. You guys can see, right? So 15-second structure is 1 minute candlestick structure. 15 minute oh, okay, yeah, and 1 minute structure is 15 minute candlestick structure. Trying to make it quite live. Yeah, it's a bit long, but you guys get the point, right? And 15-minute structure is 4-hour candlestick structure, right? So when I meant structural lows, when I'm talking structure, I'm talking you zoomed out. I'm not talking you zoomed into candlestick structure like this. At least that's how I identify them. And of course you can identify them across, even on candlestick structure like this, but just to avoid confusion, just know when I'm talking structural lows, I'm talking these lows. You can't mistake you can't mistake that. For me personally, I don't know how, I don't know why, but I easily mistake lows when I'm on candlestick structure. I don't know which one's which. But when I zoom out like this, it's just all the more obvious which lows are responsible for what. And that's just my advice though. Of course, when you backtest this and see it for yourself and your own perspective, you carry the same principle, but you have a different way of seeing it, right? So that's what I'm trying to get across to you, the principle of it, because we're all gonna see differently. But I need to at least make sure that you guys see what I'm seeing first, so that I'm showing you what to look for, and then the components of my whole system, you'll be able to backtest, see for yourself, gather data on it, and then really consider if you want to add that to your plan. Because it's there, we all got the same data, yo. Hey, Bones, no problem, bro. It's cool, G. Oh, Lord. But hey,
I'm overrotting.
So what, you using Boxy mobiles?
yeah, I'm waiting for this load to be taken. I'll be real.
Now.
Being
Our
sociable.
price is just in between these.
Wanna see
It's in this range right here.
With unlimited social media, the fun never ends on Boxy Mobile. Selected
We
social
have
apps in UK, TNCs apply.
the bottom of it. We have boom, boom. The top of it here. Now I'm looking for this side to be taken. And in the range you don't expect, lows to hold. Even this one didn't even hold. So I'm not expecting these lows to hold. But I'm looking for a failure. As soon as price comes down here, I'm literally waiting for this type of formation to play out on candlestick structure. Either this or this. So this is the earliest indication that I'll get to getting a move. This is a later indication, but it's cool though, because you know how to engage in both. Well, that's something that I'll show you guys later on. God. Yo, I hopped on YouTube like 2 months ago, innit? And I gave everything. I gave everything that I knew that made me profitable. Every single thing. Like, there was no filter. I gave you guys everything. But you know what was crazy? None of you guys understood what the fuck I was talking about. And I get it, because I was giving you guys everything from basic to advanced, and then to refined, and then super refined. You could do this, and like, you what? And then I remembered that, oh yeah, this is, not many people know structure the way Dave teaches it. It's not as defined, it's not as, yo, video 3 of the playlist was all I needed. Video 3. Just that one video. Like, I know he's got a whole playlist of videos which I watched too, but yo, video 3 was what made me profitable. That one video. That took me a whole month of backtesting. Three historical months. 3 historical months. I did it in 1 month. I saw my win rate go to 30 to 50. I say 50, just, bro, it was in the 60s basically, I'll be real. Just from learning structure, just video 3, just that one video, and I was able to build up that now. Do you know what made it? You see me using zones here, right? But do you know what made my 50% go to like, what, 70? It was just using zones. Before that, I was getting 50 to 60% without using zones. So I would just be like this. I'm gonna use that low. I'd be like this. I'd zoom out. I'd be like, I'd use this. Okay, cool, let me zoom out. I would use this. So using this now, I'd use that. So using this, I'd be like, okay, cool. I'm just gonna wait for a low to be taken and wait for a failure to close below, and yeah, look for my entry in a seconds time frame. That understanding of structure alone gave me a 50 to 60% win rate. But what made that into 70 and 80% was just using zones. Because look, I'm not going to be using this zone here, but if I had used this low, I would most likely be in a losing position. Now, I know that because I've been in that position many times to conclude that, yes, this isn't it, but I didn't know why, I didn't know how. So yes, the other parts of the original masterclass will also help you, but I'm telling you what structure alone can do, because what? 50, 60% is crazy how the standard of this trading, like, it's dumb. It's so dumb. But how can you say 30% of a win rate is good? How? How? Don't know if it's a bandwagon thing. Don't know if it's a dick riding thing. Don't know if it's a... I don't know what it is. But how can so many people agree to that? 30%? Even 40? Even 50? What? You, a trader that has enough balls to fucking actually do this trading shit, to go in the market and be like, yo, I'm gonna risk my capital here, yeah? I'm gonna risk my capital here. Taking full accountability, and you're settling for 30, 50%? That's some high standards, bro. No, honestly, this is your own capital, bro. Like, personally, for me, I said I wasn't hopping on a live market until I get a 70% win rate weekly backtesting. So to think someone as brave as you, who's willing to pursue this endeavor, to settle for 30%, 50%, 60%, no. Fuck that. I'm telling you, that's how 90% of people in this industry think. Go on Twitter. Oh my days. The people that follow ICT, hey, listen, them man, they're different breed. I will not even lie, bro. I will not even lie. They're different breed. Don't know about them, man. For me personally, ICT is just a complication. It's just the overcomplication. I put it in that box there because it's just like, yo, I don't need to know all of that. I don't. I don't need to know all of that. You don't need that much information, in fact. And I'm okay, cool. When I say information, I'm talking about you don't need that many models. Bro's dishing out model this, model that. Nah, G. You just need one thing that happens consistently every single day. I see them get chopped up here and there when I'm trading. I'll be real, like, especially what's it called? They got something called what is it called? Silver bullet, I think it's called. Sometimes, if I'm in the office, man's around that New York Open, so 2:30 around. Let me see. Sometimes I see that you see that huge imbalance that they enter on. Oof. I'm just looking at price just jugging its way down. And I'm looking at the For You section on Twitter now. I don't follow them, man. I'm looking at the For You section and being, oh, -1. Oh, -2. What? -3. Oh, I'm like, yo. Hey, listen. All you need is structure, yo. All you need is structure, but listen. Alright. All you need is structure, bro. All you need is structure. This is the move I'm looking for. A failure to close below. Now, I'll look for some shorts too. But yeah, it's really just patience. Like even me just explaining what I'm doing, that was me. That was my impatient self just right there. It's crazy because I'm like, shit, man. This in my mind, I'm thinking, bro, this shit is taking long, yo. Like you can see prices literally just started a little uptrend in there. So we're ranging, yeah. Oh yeah, I was talking about that. The demand and the supply up here. I forgot about that. So now there are ways to engage in this. But that's the advanced stuff. That's the stuff that I teach in Masters of Price. So if you want to get involved in advanced market structure, then yeah, I suggest you join. But other than that, what I'm just showing to the public is just the basics, just the foundations. And video 3 will set you off. Video 3. Check it. You see the whole me going on a structure, me zooming out like this and trailing highs and lows, all of that. Right? Me showing you this process and then going back down into candlestick structure and then blah 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 blah. Right? So if you check out video 1 of that original masterclass, you will see that he's talking about multi-time frame analysis, you feel me? Right? And then you could do the same thing on the 15 second. But don't worry, I tested this. It's still profitable, but you're in too much drawdown. Using the 15 second and the 1 second. So yeah, it's you can trade it, but that's just not my taste, I'll be real. Like your trades still end up going to profit, but you're usually in a lot of drawdown first. So structure ends up holding, but you know, it's just taking the piss, you feel me? So, but yeah. Video 1 talks about multi-time frame analysis, and that's also important. The concept of fractals, the fractal nature of price, right? Oh, why did the beat just stop? So yeah, I suggest you check that out too. I'm gonna chat to you, man, about patience, because that's how you end the day in profit. You ain't chasing, G. You ain't chasing, bro. Fuck it, you ain't even trying. You need to get that try hard mentality out of your head, out of your nervous system. Get that out of your nervous system. G. Stop trying so hard. Approach every single session, your back testing session, your live trading sessions. I ain't even trying. I'm just using all the information that I know in the way that I know the best way to do it. Does that make sense? I'm using the information that I know to the best of my ability each and every time. And you know that with each repetition, you know you will get better. Why? Because you followed rules. Each repetition of you following your rules, you only get better at following your rules. Only. I'm telling you, that's the only consequence that will happen. You only get better at following your rules. That is the only consequence that will happen. So why don't you do that? Is it that impulsive desire in you that you can't control? Then, if that's the case, which was the case for me, develop some more self-control. Self-discipline. But me personally, I don't really like to look at it like that. I don't really like the word discipline. I'm not even gonna lie to you, bro. I'll be real. Someone told me about, oh, what is it that makes? No, what? What is it that what? Someone told me. Anyway, something along the lines of what's discipline? I was just like, shit, I don't know. But I know that discipline to me ain't what it is to them, so I probably got the wrong definition. But here, I'm gonna explain it to you. Discipline to me is just about repeating a task that you don't want to do, but you know that must be done, with the objective of getting better at it and making it a controlled habit. With each repetition in a routine fashion. Now, I haven't looked up on anything on Wikipedia on that, but that's from my personal experience, my experience of what I go through on a daily basis. So you just want to repeat it, bro. Let's say you have a given process right now, and you know each step to your process, right, and how you go from A to B, from closing your position to closing in profit. So from closing to profit, closing in profit to closing in profit. Every single step, every single action, decision that you make, you know that from, you got that process right there. from one trade to the next, from one position to the next, right? So you start close position. What do you do next? Then the last thing that you should do is close position, right? So if you got that, then make sure to actually build data using that information only. Only. Now I'll be real. I'll be so real with you, man. I ain't the type of guy I've never been the type of guy to take screenshots of my trades and record them, like actually annotate them with words and shit. No. It was long for me. I'll be real. It was long. It was long in it. But that's just me. So what I just did, I basically did it the harder way, which was just push the button more. Just keep on pushing it. Keep on pushing it. Keep on pushing it. And then just let all of those trades just seep through my subconscious mind, and then I'll end up noticing what actually works and what doesn't. That's just been my approach the whole time. But that's just how my own mind functions, you feel me? Because I know that I don't have to try hard. I don't have to be try harder this shit. So I could just let my subconscious do the work. I just need to see price enough times to just get the pattern. The more you see something, you will. The more you observe something, you will see a pattern that you can use to exploit to your benefit. That's with anything. I ain't just talking trading. That's everything. And that's all it takes. Your time. But first and foremost, your attention. I'm looking for the same shit above here as well, but up here. A failure to close. Yeah, price is just taken. You know what? Let me because I said I want to do this on stream, but I may as well, innit? Let's see if price does, you know, what I anticipate, then yeah, I'll show it to you guys. But apart from that, I'm good. Let it actually happen. Alright. I want to see a candlestick flick above this hat. That's what I want to see first. Fuck it, I'll say it. All my days. I'll just say it. I'll just say it. I'll just say it. But be taking notes. But look, check it. This is the current range. So on the 15-second, actually, this is on the 1 minute. Oh, okay, cool. Yeah, cool. So on the 1 minute, I want to see that there and leave. But on the pullback, I'm looking for
Boxy Mobile's unlimited social media from £10 for now.
Being sociable?
Boring.
that failure to close above. Either like this or like that, you feel me? With the wicks. I'll just leave that there and just see if it happens. Because that's, if you guys, it wasn't too long ago, but if you guys watched the stream, which I made private now, simply because, yeah, just you need to understand the foundation first, which is what I'm just going through with you guys first. But if you guys seen that stream, then you'll know that that's just how I play the current range. But I still focus on shorts at the top of the range and longs at the bottom. But I know that if I'm gonna long, I'm still not using this. I'm waiting for, for them to be liquidated. But to end the day in profit, you need to prepare for yourself. You need to prepare for high and low prices. What are you gonna do when price doesn't get to your low? What are you gonna do when price doesn't get to your high? What if price remains in the range? You need to be able to understand and prepare for every single piece of, every single piece of price action. Every single environment the market can be in. What is that? It's the market can be in a trend. The market can be in a, okay, cool. The market can be in a trend. The market can be in a range, and the market can be within the previous range. Now, in all those three circumstances there, you should have a plan of engagement. How do you engage when the market is doing this? Nah, no confirmation on the 5 yet. Yeah, this ain't the time for that. But yeah, I said cool. Yeah, I'm waiting for a flipping candlestick structure first. Yeah, I'm gonna wait for that first. So look, I'm gonna be trading my lows. Look at me, already looking for confirmation on the 5, and the 1 minute hasn't even done its thing. See, you gotta call. You need to notice that within yourself too, which is what? Self-awareness. In order for you to actually improve, you need to be self-aware of what the fuck you're actually doing. Hence the whole point, observation. So imagine, this is what I used to do. I see price get in the zone and look immediately at the seconds time frame to look for my confirmation to enter. Now I saw my past self just there. I would have been cooked right there. You saw the way price took the high. No consideration for your stop. It just took it. Yeah, I used to be in them positions there. But yeah, I don't care to be traded these little lows no more. But we made another higher time frame swing up there. So we just broke out of a high time frame range, right? Making this the previous range. Likewise, this whole range here, we got the body closure above it, making this whole area the previous range that we come back into. Look, when you see a 4-candle pump, one, two, three, four. If you see 4 consecutive candles on candlestick structure, right? You want to wait for, whoops, you want to wait for price to break below the previous up candle's low, then wait for the liquidation of it, and then your entry would be that little confirmation there. So your entry would be this. It looks exactly like this. You would wait for, well, your entry is within here. That's what I'm talking about when I highlight that. So that's how I engage with that, and that is what I'm going to do. Because usually the first people to counter trend the move after a breakout of a higher time frame range get liquidated. Likewise, the people that long to liquidate the people that shorted first, right? They get liquidated too. So I already know where my target is. Now this happens, I'd say 50, 60% of the time. So there are times where it can not go back and take out a protected high. Hold on. Yeah. So in this case, a protected low. But if that's the case, that's cool. Because that's just closer to eating up all these lows here to finally get to my zone. So then again, it's just about patience. Like I said, I'm only willing to long at the top of it. I mean, I'm only willing to short. My bad. So yeah. But the S&D responsible right there. Let me make sure. Yeah. But on the 1 minute time frame, it's right here. No, is it? Sometimes when I count swings, I get more than 7, and it shouldn't be more than 7 max. Is there some reasons for us to restart our swings counts when price is trending, creating swings up? I know what you're talking about. Let me find a good example for you. Okay, cool. I'm going to explain the principle to you right now. So, check this extension up here, yeah? When you're counting your swings, right? You've got 1, 2, 1, 2. So you have 2 swings from the same time frame. Right? Now, within the higher time frame swings, there are lower time frame swings. The lower time frame swings are on the extension. So when you count the swings inside the lower time frame, you see 1, 2, 3, and price reverse. And then that's the restart you're talking about. You restart counting your swings and you start counting your lower time frame swings again. You got 1, 2, you got 2 there, you got 3, little swing there, and you see a violation of it, and then we got the reversal. And you count your swings again. You see 1, you see 2 there, you see a reverse. 1 and then 2 there, and then 3 there, and you see it reverse. So to answer your question, let me see. Sometimes when I count swings, I get more than 7, and it shouldn't be more than 7 max. There's some reasons for us to restart our swing count. So yeah, every time a new swing is created, count the lower time frame swings. So that, how do you identify a new swing? So on the time frame that you're on candlestick structure, you can just make sure that you get a body closure below the previous candle's low. So this low is just the previous candle on the higher time frame. So look, if you trail your lows, boom, boom, you see a couple wicks there on a 1 second, probably see a closure there. Boom, boom. If you trail them, that's the got that there. Likewise, if you're in a downtrend. But listen, yo, watch video 2 of the playlist. You know, Dave can explain it way better than I can. I don't need to explain that, bro. Like, that's basic shit, for real. I can't be bothered explaining that. But video 2 there, because look, I'll be real. I don't count my swings. I'll be real. Like, yo, if man's watching this video right now, yeah, and says, yo, I'm pretty sure he'll bug out if I tell him, yeah, yo, if I say right now, yo, I don't really count my swings like that. It's really more after the fact. He's gonna bug out and say, yo, what? He ain't no student of mine. But genuinely, I don't pay attention to the string counts like that. Because usually just when price just enters, it's because I know when to enter and when not to. And okay, cool, yes, I've already recorded, you know, hundreds of trades. Me actually counting my swings. And I know it's where that 4th to 6th swing usually is, and it's in the origin. It's in the S&D responsible. It's within avoiding zones at the top of the range if I'm longing, zones at the bottom of the range if I'm shorting. Zones that have been, what's it called? What's this? Why did I mark this up? Hold on. Middle of the range. Zones at the middle of the range.
So what, you using Boxy Mobile's unlimited social media?
It's understanding all of that just made me realize, oh yeah,
Wanna see what you actually
okay, cool.
With unlimited social media, the fun never ends on Boxy Mobile. Selected social apps in UK, TNCs apply.
Yeah, I understand that now. So that's why I don't pay too much attention. I guess it's just subconscious at this point, which I am just now realizing. Before I would need to use to you know, put some down arrows here to like literally count them while live trading. But what? I don't need to. I already see that. Hey, Bones, trust me, you got it, man. And I appreciate you asking questions. And that's what I'm here for as well. Like, I can accelerate your progress. I can accelerate your growth. I've been through whatever obstacles that you're just facing right now, bro. I've got the solution for that. There. Been through it. There was one time, yeah, cool. I learned the original masterclass. I even learned more than that, right? But There's a time when you need to, when you master the concepts, there's a time in which you need to start mastering self. So you basically know everything, but can you use it? Can you use it? That's when you start to master self, because now it involves you. Like when you're observing, when you're learning, you're only observing. You're only seeing what price is doing, but then you need to learn how to execute on that information there. That's when you need to master self, and trust me, that's gonna be a time where that's what most of your back testing will be on. Then when you master your concepts, it's really just about execution. But listen, Bones, the fact that you're asking questions here and there, I see it. I see it. You got it. Keep it going. Can I ask you valid high and low criteria? A valid hole. I said a valid hole. A valid low. Yeah, I can show you that. Give me a second. Let's say we're uptrending here. And we get that. If this is a body closure, right? If price closes below this low with a body, say that's just a candlestick. You know, we got a downtrend here, type shit. It validates this high. This high is now validated. But let's say we only got a wick. This high is not validated. So body closures below and above previous candles, highs and lows are structural. I say previous, like to identify a body closure, like valid highs and lows, it's best to be on the candlestick structure, because you can actually see if it's a closure or not, right? There's only 4 pieces of information that each candle is represented: the open, high, low, and close. But you know, when I told you to trail your highs and lows, right, your structural highs and lows, it can be a little bit confusing. Like, you know, let's say around here, right, or around here, you can't really tell. Well, you can, but that's more that's you feel me? That it's just really just understanding that if on the fifth, that's just too much. I'll say that later. That's just for later. Yeah, I'll show you in candles now. I'll show you in candles. So, let's start from the origin. Okay. This high was responsible. Never mind. That high was responsible for putting in the low. Right here. You see a body closure above it. We're now uptrending. This is a valid low. You see this low, responsible for putting in a new high, get violated. That high is now valid. You see this high responsible for putting in that low. Oh, never mind. It didn't do shit. So basically it would be this high responsible for putting in this low. So your body closure above it. This low becomes valid. You see your body closure above this up candle this high above here becomes valid. Okay, why didn't you choose engulfing bearish? What the fuck is that? What's an engulfing bearish candle? Engulfing bearish candle. I don't know what you're talking about, but if you're asking me to describe the candle, then I'll describe it like this. This is the last up move to put in a new high. You see this up candle here? This low was responsible for it. So we got a body closure below it, making this high responsible. Likewise, this candle here was responsible for putting in a new low. I mean this high up here. We got a body closure there, making this low valid. So those are the reasons. That's how I validate my highs and lows. But damn, price is just Now, I pay attention to the wicks. So, I don't want to say I pay attention to the wicks, but I want to say like, it's an advanced understanding, I'll be real. You don't need to know that yet. Just pay attention to the body closures. But that's just one example of what I mean. If you catch on, you catch on, you feel me? Even here. But you don't need to, it's not a major, but I don't want to overload you guys with information, you feel me? Just master like using body closures first. And then, you know, yeah, when I see that you guys can actually do that, I'll just introduce that to you guys. But can you explain advanced? Nah, I don't need to. You don't need to know that yet. If you want to learn the advanced, then that's why I teach a Masters of Price. That's why I teach in my group. And that's why, you know, when you already have a good understanding of what structure is, yeah. But you gotta realize, you know, when I'm streaming publicly, that not a lot of people know what structure actually is. You feel me? I'm trying to get them up to speed. That's what I mean about not overloading you guys with information. Yeah, no problem. That's not part of structure. So if for some reason you wanted to use this S&D here, first of all, it's at the top of the range, so you're not using that. Second of all, it's at the the top of the higher time frame range, so you're not using that. And even on the 15-second time frame, it's showing that it's not part of structure. So be careful where you're placing your long positions. When you're risking capital, just be conservative with it. Yeah, so I run a one-on-one mentorship teaching advanced market structure. If you look at the link in the description, you will see the link to my group. It's called Masters of Price. In fact, check it. Nah, I ain't gonna do that. I was gonna even give you guys a little sneak peek, but I can't lie. There's sensitive information there, so I don't want to just, you feel me, make that public. So this is a zone that you're not using. Let me make it purple. And I'm not using this zone either. God, whoa, wait a second. Hold on, no. I think, nah, don't think. Let's follow price, right? So we got that, we got that, we got that. I'm gonna wait for that. I'm not using, in fact. Yeah, I'm using this, I'm using this. Look at the origin of the move here too. Alright, cool. I don't need that. I don't need that. If you're that impulsive trader, if you're someone that feels as though that they need to be in aggressive positions, I'll be real with you, bro. It's not gonna work out for you, bro. You'll forever stay stuck on 30 to 50%. Like you will forever be stuck on a unsustainable approach to trading. Ask me how. How do you know this? Because that's what I was doing. I've been naturally aggressive in every approach that I make. And I thought I could do the same thing with trading, but it's not. And I'm actually glad that I learned that I didn't need to be, because, you know, usually when I wait and I choose to be patient, I'm usually calm. And I learned that I perform my best when I'm relaxed. But if you're trying to be in, you know, I want to be in a long there, I want to be in a short there, I'm seeing that zone there, and I want to take positions in all of them zones there. oh shit, you know what? I'm gonna throw in another person's concepts and just slap it into my thing when I don't even know how the original thing even works. But I'm gonna do that, make it my own spice, and then if you're thinking like that, in fact, if you're making decisions rooted in that, mm, mm, now that's an extreme, the extreme of it. But you don't want to be taking you don't want to be taking positions anywhere and everywhere. You feel me? Now, for me personally, I usually focus on longs. That's why you only see me marking out uh bullish zones, right? That's because I only focus on longs. But if I recommend that you do the same thing, especially if you're learning structure, because it will teach you that patience. It will teach you what you need to be patient for, not just be patient, but you don't know the actual. Like that's what used to bug me out. Like people say be patient. Patience pays. Patience is one of the most agreed upon virtues in the trading industry, right? But I was like, now me, a person that's not patient like that, I'm like, yo, what the fuck am I being patient for? Like, bro, be patient. Okay, cool. I'm sitting on my hands for what? And that's what used to make me antsy. I'm like, bro, no, I need to execute a trade. But see, that's when you now, okay, cool. Focusing on one side of the market will teach you how to trade with the trend and trade against the trend if you're just focusing on longs. But especially with the information that I'm giving out, especially with the information in the original masterclass, it is a lot of information. And for you to try and see it in both in both positions at the same time will fry your brain. But I'm not saying that you can't do that. You can. But when you're learning, it's best if you just stick to one side. Because that will teach you the patience. And when you get that down, you're gonna be so thankful. You know why? Because you're now understanding that the patience that it took for you to grow, to build, when only on one side of the market, now you're zen. Because now you're able to actually see how to take counter trend trades, how to see the other side of the market too, making your decision making even better. And not only that, that impulsiveness that you couldn't control, that you did control when waiting for the long side of the market, because you did that, because you took the time to master that, the market rewards you now from what it showed you to what to wait for, with now even double the amount of setups now in a shorter amount of time. Now you know you don't need to chase. So yeah, I can take a short hair wherever I wanted to, obviously following rules. But I'm more comfortable taking longs. It's that knowingness within you. It's that knowingness of you have the ability, you have the skill to do it successfully. That's what makes it so that you can be chill trading. For me, this is part of my daily routine. I wake up in the morning, do two tasks here and there, and I'm like, okay, cool, I'm gonna execute one trade. Then I'll just do something else, blah 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 blah. Okay, cool, I'm gonna execute another trade. From London session all the way to New York close, sparingly throughout my day. I just hop on the chart, see where price is right now, and I'm like, okay, cool. The next move that I'm gonna participate in, it's either gonna be below there, it's gonna be above there. Why? Because you're preparing for higher and lower prices. So that's usually like what, London session to like New York Open. I stopped trading at New York Open. And by then I've probably already taken throughout the day, like let's say from like 9 o'clock to 1 to 2:30 p.m. That's like I could take three, like 2-3 trades. You know, probably 2-3 trades will come up.
Boring. Wanna see what your ex is up to?
With unlimited social media, the fun never ends on Boxing
And
Mobile.
now
Selected social apps
you're
include
up for the day. That's how I've incorporated it in my lifestyle anyway, you feel me? But focus on one side of the market, that was the whole point of this whole thing that I went on, you feel me? So yeah, that will speed up your learning, that will accelerate your learning. Because now, as you're able to observe way more price action than you could if you were to focus on one, if you were to focus on both sides. Because focusing on one, you're automatically learning the movement of the market. And you know that shorts and longs develop the same way. Structure develops the same way on both sides. Since we are at the top of the range and consolidating, we could push higher before the pullback. Gee, I don't know. I don't know about all of that there, I'll be real. I'm not saying that you're wrong. I just don't know. What I do know is that I'm prepared for when price goes lower or it goes higher. Whichever direction it goes, I know how to plan my next move. Now, me personally, what I'm putting my money on are those golden boxes that you see there. Hey, Bones, I appreciate it, man. Yeah, man, I appreciate that for real. Yeah, man. I do your thing, bro. I'm glad you was in the stream, bro. Guys, I'm gonna call it a stream. I'll be real. I think I gave you guys enough, more than enough information. What? Oh man. Yeah. I thought I'd just hop on and just lay down my whole process. Now, I did want to stay. I thought getting a trade, but no opportunities arise, and that's cool. I know if I had more time to stay longer, then it's cool, but that's fine. There's an abundance of opportunities within a day, and that's what I know. I don't care about the time. I don't care about time. You see me streaming Asia, London, and New York. I keep getting to $200 to pass in my eval, but always gets them blown. Whenever I reach there, I just can't keep my head straight. Try decreasing your size, the amount of contracts that you earn. So I'd say, I don't know, how many contracts are you trading? Just reduce your contract size. Trust me, like it's something as simple as that can take a toll off you, some when we're trading, there's that level of anxiety that actually affects our performance, which you can easily remove when you reduce your contract size. Literally, it's as simple as that, because there's a less of a give a fuckness to the trade. 5 micros drop down to 2 micros. Now I'm not saying throughout the whole eval, but you know that, you know, when you're so close to the profit target, you tend to slip up. So when you're close to the profit target, just cut it to like 2 contracts. No need to rush it. So that even if you do take a couple hits here and there, you're still not too far away from your profit target. You feel me? Like you know what got you there in the first place. But it's that observation within yourself that you're like, okay, cool. I know I usually fumble near the finish line. I'm gonna take it slow. You feel me? So that's something that you can implement and see how that works out for you. Because even I think it was like 2 weeks ago was probably the last time where I was really exhausted, just mentally exhausted. Just my brain and the charts, just that's all my eyes were seeing, and it was just, oh, I had to take a break, probably like 2 days. And there's that exhaustion. It's weird. Like, yes, you know you have the ability to win, to end every day in profit, but you still need to take care of, you know, your mental. Still, I can't lie. That's something that I had to realize last week, even this weekend too. Even this weekend, you need to take care of your mental capital because this requires so much brain power at
I'm
first. At
overrotting.
first,
So what you using
but
Boxy
as you
Mobile
make things more
social media for
subconscious,
£10
it will
per
get
account?
easier. You will
Wow,
start to
more already.
build
What have
more
you been up
mental
to?
reserves of energy to now focus on other things. Like at first, when I first started trading live, this was what I was only trading, but now as I've gotten better at following my rules and making it a habit in which I don't need to consciously think about, I've now been able to start adding things into my daily routine to now I'm like, okay, cool. Now I'm advancing on this side of my vision now, not just on, you know, just with trading now. You feel me? Yeah, man. Just keep going. Keep going, bro. Yeah, man. Hey, Cesar Watson, I appreciate you being on the stream. There's a guy in here with a letter U. You was on the stream asking a couple of questions too. And Lazy Bones, yeah, man. I appreciate all the questions that you guys asked. And yeah, man. If you guys really want me to develop your understanding on structure one-on-one, then therefore, just link in the description. It'll bump your win rate up. Masters of Price is the place for you, dog. I'll be real. So, hey, listen. I'll see you, man, tomorrow. Maybe a London session. Yeah, London session tomorrow. I'll be there. Appreciate it.